We are talking more mining or maybe commodities on this edition of Equity Guru Investor Roundtable. I'm Rob Simpson, sitting next to, sorta, although he's over there, Vishal Vatura. Down below me in the lower bunk is Chris Perry, and in the opposing corner is TK Indochina. Globex, it calls itself the Mineral Property Bank. So this isn't just about them. There's gold in them Nar hills. This is about everything, right, TK?
Exactly. As Vishal would say, he loves the royalty space. It's same exposure to the upside, limited exposure to the downside. And these guys have taken an investment philosophy that people use for trading and executed it as a business model. And as of right now, the CEO is this character called Jack Stotch. I think a more astute definition of his role is CEO, president, and informal geologist. There's no geologist in-house. They just have advisors who kind of help them with the diverse portfolio of products they do have. So I think the number might be wrong. They might change every day, but they have close to 190 properties that they own through either option contracts or royalties. So most of their income is generated not the traditional way, but through royalties and contracts. So they actually don't. They own the right to the profit generation of each property, but not the rights to the risk of the property. So that's a big distinction between the two, and it's something a lot of people don't understand. But I think from his experience as a geologist, he kind of saw the marginal cost benefit analysis of going through that, and he separated the two and created a business model of royalties. So that's the rundown. And I still have more to say about Jack later, but that's the rundown on the business.
All right, we'll come back around to the CEO, the prospector, when we get our opinions and our thoughts on the investment, which, by the way, chart man, Vishal, is GMX, M as in Mary, GMX as in Mary, .to, around the buck level.
Very important zone.
Yeah, what's happening?
Yeah, very important zone. And the stock, as you can see, nice uptrend. Since the beginning of this year, we are up 50.72% year to date on a market cap of 57 million for all these. It's 202 projects. So here they all are. And I just want to show you guys this too. We can just take a look at where they're mostly, in a safe jurisdiction. And that's what they say, right? That a lot of their projects are going to be in safe areas to keep the risk low on that side. We did talk about the fact that it is basically a commodity play. I mean, it's not just gold and silver, but it's literally everything. And if you're like me, that's looking for what's cheap in these markets where everything seems overpriced, with stocks making new highs, with bonds running, you got cryptos doing their thing, you got real estate as well doing their thing. Everyone's looking for yield. A lot of hedge fund managers have said the commodity space is actually the cheapest, and they use the Bloomberg Commodity Index. If you have that with the S&P 500, it's actually still very cheap and has a lot of room to go to the upside. So when I think about commodities in general, these guys, look at themselves or call themselves a mineral property bank. They don't have oil, so oil is the only thing that they're missing, I believe, and that's a large part of the Bloomberg Commodity Index, oil and gas. But to play everything else, I mean, if you want to play a pure commodity play, I think this is the one. Stock, nice uptrend, and as Rob said, we're at that big $1 level, which is very it's a psychologically important zone, and you can see here that for the last 2 or 3 weeks here, since the beginning of July, we've just, more than that actually, for almost 2 months now, I forgot it's September almost. We've just been ranging around here, and the buyers are stepping in, picking up at the $1 zone. And what I want to see for more further follow through is, of course, that breakout there of $1.20, and you have something that's called a double bottom, which basically just looks like a W. But this is a play. I think it's quite a nice market cap, has a lot of properties. if you're bullish on all these commodity prices, I think this is a good area where you'd want to pick up at the big psychological $1 level.
Chris, you jumping in?
Yeah, I really like what these guys are up to. Streaming models are something that we've had a lot of success with at Equity.Guru in terms of recommending picks. We've had a couple over the years that have gone really nicely, so nicely, in fact, that they stopped needing to market. So we should probably do less of a good job. But I digress. These guys, like a royalty is, as these guys have said, is a comfortable asset. The risk is low. You can pretty much predict how it's going to go. What these guys have at the moment is, if I look at the chart, I don't want to steal Vishal's thunder, but if I'm looking at the chart around May, they suddenly took off on the announcement that they were laying off one of their properties to electric resources. That came down a little bit when they restructured the deal to make it easier for the buyer to go through. And then in the time since, it sort of dropped back to around that dollar stage. I suspect there's a lot of guys out there that think at $1 this is really cheap and just have a standing buy order if it gets to that near that price, because it's starting to really plateau a little bit, which is good for mine. The company still has that $13 million on a $57 million market cap, so that's nice. They have a bunch of stock for the company that bought their asset, and I get it now for the same price it was before that deal was announced. So that's almost an arbitrage in my perspective. So I think Globex runs on the board. They've shown what they can do. They've continued to do deals. Money's coming in. They're earning, I think it was a basic income of about 12 cents a share, which at $1 a share is pretty great. I don't have any problems with these guys. I feel like they're a comfortable guardian for my money.
Back around to you, TK, and thoughts on the CEO and his impact on you.
Awesome. It's nice to see in today's day and age where CEOs are being hunted by agencies and put into companies to actually do their job, and actually see a CEO who's dedicated to shareholder value in the long term, which is supposed to be their main goal. But this is where probably Chris can confirm a fun fact I found, but he's a 9% owner of the company. He owns 9% of the common stock. But I think there's a Diane Stotch. I'm not sure the relationship, if it's a wife or a child, but she's a part of the board and she owns 2% of it. So essentially the family name might own close to 10% ownership. Their net worth is basically invested with us as shareholders. And most of their activities are going to be long-term decisions because they're right in there with us economically. But it's his story that's fascinating me. This is a serial entrepreneur who was a geologist at the beginning. He started a consulting company, and at some point, he was the largest owner of property royalty rights in Canada, Northern Canada, I think. I forgot the actual title, but something like that. And from there, he just took the business model and founded the company and just continued the same business model in-house. And that's an amazing entrepreneur, if you can ask for today in the geologist space. You don't see a lot of innovation in the space, and it's just amazing to see someone think along the lines of shareholders and also execute on the business side of it. And to go into the numbers, they're one of the only junior versions of themselves who actually generate cash flow. So generally, a lot of the companies need a lot of financing to back some of their acquisitions. They do raise a lot of equity, but they also generate cash internally. And that's just due to the business model that they use. It brings in more cash than it takes out. And this is not fake accounting cash. This is cold hard cash. Cash is king in this situation. And they use that cash to make small acquisitions in new royalty properties that will increase the base, reducing your overall volatility as an owner in the royalty, creating a steady stream of income going through. And they have a pretty conservative capital structure, not too much debt, just nice clean equity, and it's a perfect
Whoa!
fundamental.
Whoa!
Oh my goodness!
There's a first. Wow!
Zimbabwean kiss of death.
Goes. Holy!
Next
Real.
week.
TK likes the
Oh,
stock.
right.
But that's it. I'm done with.
Okay, so how much are you spending?
All of it. I'm
All of
levering
it.
up.
Whoa!
You're taking my $5,000 and you're spending it. All right. All right, Michelle, what's on your mind?
All in.
So as TK was saying, share structure is there. You have that income, the income coming in from royalty and streamers. You have that experience with management, the amount of properties they own, no debt, low political risk because a lot of their assets are here in North America. And specialized. I think that goes along with the experience side. I'm bullish on, commodities in general. I do like the gold and silver space. I wrote this back a while back, actually, about investing in gold and royalty and streamers and why I do so. And you can take a look at that. But I have a little chart here indicating, if you're investing in GLD, the ETF, or a mining operator, or a royalty and streamer. The royalty and streamer is the one with the lowest risk compared to capital costs, operating costs, leverage to gold prices, exploration, dividend, compared to GLD and the mining operators. So as the Wall Street bets guys say, I like the stock, and I like the $1 zone, and I like the basing that I see here as well. $1 is usually a very important zone for these type of stocks, and I would be putting a buy order here as well.
Chris, final say? Throwing more of my money at it?
The difference between a royalty company and a prospect generator is time. When you're looking at prospect generators, there's a lot of them out there, and they're generally guys that are going and snapping up properties for $30K and a six-pack to a lonely geologist, and hoping that someone somewhere suddenly gets the desire to grab one of their properties. When you're generating genuine revenue because you've made those deals already, and you've figured out how to keep a piece of those properties that you've then sold on, now you're a royalty company. There are no royalty company pump and dumps, right? If you're a streaming company and you're trying to get out in 4 months, you're doing it wrong. These are long-term companies that over time just get bigger. And some of the biggest resource companies in the world started out in this manner. These guys have followed the game plan to perfection. They've done what you would hope that they would do. They've demonstrated that they know what properties to grab, and they know who to tap on the shoulder when they want to flip them. And so what I'm looking at with one of these guys, when you're playing poker, you'll know this, Rob, I'm sure you've had a couple of games on the bus. Mm-hmm. You come in with $50 buy-in, and some douchebag at the other end of the table plonks down $500 in chips. Mm-hmm. And you just know that you're at the little guy at the table, and you got to play it different, right? You got to play more defense. You got to protect your stack. That guy, he doesn't give a shit. He's going to pull you into all-ins every second. That is the royalty company market. These guys, when you're starting out, you've got to be really careful with the deals you do. But once you've started to accrue money, then you're the bully of the table, right? You can go out to those little prospect generators and you can pick them clean. You can go out to companies that are in distress and find them the money that they need to get out of distress. You are the guy that everyone wants to talk to. You're the girl at the dance that hasn't been taken home yet. And so I think that Globex is, when they came out and said they were going to make this their business plan, cool. Okay, show me what you can do. Well, they've shown what they can do. And so now if I can get that company at the current market cap, knowing what they hold, knowing what's coming in, knowing that they're profitable on a basic income at least, this is just a nice place to put your money. It's not even a trade. It's barely even an investment. It's something that you just put away and let it do what it's going to do.
Let me just quickly show you guys FNV, which is Franco-Nevada, which is the dominant, I would say, royalty and streamer company. It's a blue chip trading at $184, but look at that rise, right, going back when it was under $20 in 2010.
There you go.
It's an investment vehicle, right? And if they're investing large institutions worth of money into what they're buying, then they can damn sure have my couple of grand.
Gentlemen, I'm just going to tell the folks out there that they need to do their own research and not believe everything we say. At least don't take it to the bank, because we're not responsible for your investment decisions, and past results do not guarantee future performance. By the way, real quick, because you give it to me one more time, TK. This is telling the folks.
Yeah, just add a bam to it when you do it.
I like
oh, there's your answer. There's your advice.
A million
Again-
Tinder profiles just swiped right.
Do your own research. Take care of your own business. We appreciate it. It is Globex. And I'm Rob. That's Chris down there. It's TK over there. And that's Vishal. We'll see you on the next Equity Guru Investor Roundtable.